Now, many people's favorite part of our show, top 3 things that individual investors need to be mindful of, focus on before you make your investment decisions. And we have our usual 3 ideas. First one today, corporate earnings to watch. Now, if you're a Canadian investor, which many of you watching are, Canadian bank stocks make up very much a very large part of Canadian portfolios, right? Canadian investor portfolios. Well, Canadian bank stocks are going to report earnings coming up in the next week, week and a half. The big banks, right? Your top 6 are going to report. Maybe even more important to the stock market than the Canadian bank stocks, Nvidia. Well, no longer the largest company in the world, or fighting for that crown at this point. But Nvidia, one of the largest companies in the world, largest chip maker, semiconductor in the world, makes up such an important part of our markets. They're reporting earnings coming up. So we'll touch on that. Inflation. We're going to get inflation data. We're going to get an update to GDP data in Canada and the US. How will that affect what the Bank of Canada and the Federal Reserve do with respect to interest rates? Will they think about cutting rates in the US, or will they stay the course and stay on hold? Tariffs, the threat of tariffs, the uncertainty of tariffs. That's ramping up all around the world, with President Trump talking about reciprocal tariffs now on places like Europe and Asia, and obviously Canada and Mexico. I guess the issues, or the uncertainty, is definitely starting to ramp up, and we'll talk about that. So let's move on with our first point, corporate earnings season. And as I said, very important for Canadian investors are our Canadian bank stocks. And if someone were to ask me, what do I anticipate coming out of the Canadian banks? I think I'm going to say pretty good earnings. A lot's going to depend on certain things, how much money banks are setting aside for bad debts. Does that continue to increase? We've seen it increase in the last few quarters. Will that come down? Will it stay the same? Net interest margin, that spread between what banks pay on things such as GICs, so money that is lent to the bank, versus what people pay on their loans, right? So what the bank is paying versus what it's taking in, that spread, that's net interest margin. For the banks, we want to see that grow. How is lending? What's going on with lending in Canada? Now that interest rates have come down, are businesses borrowing more? Are people borrowing more to buy a home, to increase or grow their business? These are all the things that we're going to be looking for with Canadian banks. Our first chart here, Royal Bank of Canada, probably the best performer, them or CIBC. You can see it's kind of topped out here in that 170 area, hasn't really surged higher, and that makes sense, right? Royal Bank is at all-time highs. Stock trades in and around 12, 13 times earnings. I think at best fair value. Some would say maybe even slightly overvalued. With that HSBC acquisition, they're still bringing that business into the fold and reaping the rewards gradually of bringing the HSBC business under their wing. So I look for some really strong numbers out of Royal Bank. The question is, how far or how high can the stock go? They pay dividends just over 3%, so nothing great. There are other banks that pay higher. Our next bank stock, for example, Bank of Nova Scotia, an example of a bank stock that actually pays a lot higher, a larger dividend, just under 6% dividend, 5.5%, 6% in dividends. And Bank of Nova Scotia, we want to hear from them how this restructuring is going. We can see that their stock surged recently towards the end of last year, but as of the new year, we've seen it in the first couple of months, stock price start to come down. And again, the dividend has started to increase. But Bank of Nova Scotia exiting a lot of businesses that they believe aren't as good quality. A lot of these are international businesses trying to move more into the US. And we'll see, we'll get a report shortly on how that is going. Next bank, TD Bank. And I bring this up because a lot of people have been negative on TD Bank. And as many of you know, I'm a contrarian. So when everybody was more negative on TD, I've been a buyer of TD stock. And yes, it's fared my investors quite well, as you can see by this chart. TD Bank stock back into the mid-80s. It was down to the mid-70s in stock price. And today it is in the mid-80s, still producing a dividend over 5%. I think a good opportunity. I think TD still has room to run. We want to hear from them They no longer are giving a forecast with respect to growth numbers. They've stopped doing that. CEO is stepping down sooner rather than later, which we know that has given a boost to the stock. We want to hear more about their issues in the US, their money laundering. We want to hear how they're faring, how their numbers look, net interest margins, and all that. So TD Bank is an important name that I think we want to focus on. And we're going to focus on all the names: Bank of Montreal, CIBC, and National Bank. I think if you look at our top 5 banks, you would say CIBC, Royal have been the 2 best performers, followed by BMO, and then the laggards have been more TD and Scotiabank. If you want to include National, it's been a fantastic performer. Not as good as late, so maybe more in the BMO area. But overall, I'm looking for really good things out of the banks coming up. NVIDIA stock, let's put a chart on that. They're going to report towards the end of this month, next week. And very important, obviously, you can see NVIDIA stock is sort of being flat, moving sideways. On the far right-hand side, you've seen NVIDIA move from about $120 to $140. I guess investors are expecting a pretty good number out of NVIDIA next week. The DeepSeek scare, as I mentioned earlier, really that's all it was. It was a scare, and cooler heads have prevailed, and we've seen NVIDIA move back in. So overall, corporate earnings are going to heat up in the next week or so. Second topic I want people to focus on before they make their investment decisions are the inflation and the GDP updates. So let's talk about inflation. Our first chart shows inflation in Canada. We're going to see, well, we see that our Bank of Canada rate 3%. Latest report on inflation 1.9. Again, that rate getting the benefit of a GST holiday. Many believe that's going to creep up into the 2.5% range. Now that HST GST holiday is no longer. That ended on February the 15th. U.S. inflation is the number we're going to look at, and in particular, PCE, personal consumptions and expenditures. That is the preferred measure by the Fed, and in particular, core PCE. And this chart shows all the numbers that I think are actually very important: core CPI, core PCE, core PPI, which is your wholesale prices, average hourly earnings, and the Fed's target, which is that 2% rate. And you can see here, average hourly earnings have been sort of flat for a little while. Core PPI has come down a little bit. Core CPI has moved higher in and around that 3.3% rate. But many believe that PCE, when it's reported next week, is going to show a number that's in and around 2.5%. So many people are happy for that. They believe that we're going to see the PCE number come in just right and maybe alleviate some pressure on the Fed to perhaps not want to increase interest rates. You know, we've talked about lowering rates. Many people are talking about the Fed increasing rates, so we don't want to hear about that. The next chart, GDP. This is GDP in Canada. We saw GDP for the month of November actually show a negative number. So we're all wondering what the December number will show. We think it's going to be a positive number, so we're not in jeopardy of having a negative quarter. As we know, 2 negative quarters back to back represents a recession. So hopefully November was just a blip to a bit of a better number in December. Next chart, US GDP. And we can see that it's been coming down a little bit. We had 3% in Q2, 3.1, so roughly flat, Q3, but a drop in Q4 to 2.3%. So we'll have to see what we get as an update to that number. We're going to get an update on US GDP shortly. But again, PCE, inflation, a market mover. And why is it a market mover? Because it's going to give us some insights and give us some information that the Fed's going to use before they make their next investment rate, or sorry, interest rate decision, which will come up in March. And many people believe that the Fed will be on hold at least till June, whereas the Bank of Canada could continue to cut, which, as we talk about often, not good for our dollar versus the US dollar. But overall, we're going to keep one eye or both eyes on PCE and inflation and an update to the GDP numbers. Our third and final point that I think individual investors need to focus on is this whole conversation of tariffs. And we hear about it every day. As the President of the United States says quite often, tariffs, or now maybe even the words reciprocal tariffs, are his favorite words in the whole dictionary. He tends to talk about it quite often, but he tends to also change his mind quite often. You know, will we have tariffs put on Canadian goods at the end of this month? Once upon a time, We were given a 30-day reprieve as of the beginning of February. Well, you don't really hear about that much anymore. We've also heard about tariffs on steel and aluminum. Are those going to go through? Now we're hearing about reciprocal tariffs. So if someone tariffs the United States, then the United States will tariff them back. They're doing an investigation or some research into that, and we'll have some answers out of White House the beginning of April. So that's delayed even further. So we keep hearing about tariffs. And I guess in the last 24 hours, hearing about tariffs on semiconductors or chip makers, hearing tariffs on pharma goods and pharmaceuticals. So it's always changing. Deadlines are always changing. And we're just not sure how to parse through it. But important definitely for the stock market and individual investors. Our first chart here, U.S. tariffs. Tariff revenues are a small slice of the pie. You can see here the red shows customs duties, which is what another name for tariffs is. You can see how much it makes up of revenue for the U.S. government, a very small portion. You go to our next chart here. The impact of proposed tariffs on auto sales would be significant. You can see 2025, the base case for Canada and the US, how much they would have grown. That's the black bar there. Then if they put a 10% tariff, that's the gray, how much it would fall. And then a 25% tariff. You can see how much the automobile industry would be impacted by 25% tariffs. On both sides of the border. Keep that in mind. That's really important, both in Canada and the US. So overall, tariffs are going to affect things. The talk of tariffs has already affected things. As Premier Ford on our show has said, it's already causing individual businesses to figure out, what they need to do, where they should take their business. Should they move their business to the US so to avoid tariffs? A lot of this is already being parsed through, ideas spoken about. And as an individual investor, it's definitely something that you need to keep one eye on, perhaps both ears on going forward, because it definitely will affect the stock market.